Hello and welcome to Pro Trader Strategies market commentary for Tuesday, July the 28th. I'm Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, and how that impacts the overall markets with my market analysis. And I do the same thing in these daily market commentaries, but I go a little bit further here and talk about option strategies that we can implement about and around those assumptions we come up with for our portfolios to increase that overall yield. All right, without further ado, let's talk about the economic data across the pond. Not really a whole lot to see there. Keep in mind, though, here in the United States, a busy couple of days as we have the first of two-day meeting for the FOMC. What are they going to do? Are they going to increase rates or decrease rates, lower rates? No, they're not going to do anything. It's 100% probability. Zero happens. So here in the United States, let's talk about our economic data. As a matter of fact, I don't know what their Fed announcement is. They're not going to do an announcement today. It's actually tomorrow. I don't know why on my thing it says announcement. But here in the United States, Richmond Fed manufacturing doubling it. Expectations coming in at 10, expected to be 5. Well, on the flip side of that coin, we've got the CD consumer confidence coming in at 92.6, expected to be 94, so slightly lower than expected. Remember, the low water mark was back there in April when it came in at around 86, so above that and above 90, but far cry from what we've seen in the past when the economy was doing really well. Part of that is probably the fact that we saw this opening up of the economy, and then all of a sudden they started shutting the doors on like gyms and restaurants in certain places. So that probably waned on consumer confidence as they were worried that they probably are going to find a more difficult time to get back to work. Also, we saw a lot of the stimulus money coming off, whereas at the end of July, we're going to be seeing the stimulus with that unemployment, that extra $600 a month come off. So a lot of people probably getting a little worried. PPP loans for all of these companies where they were using it to kind of keep staff on is kind of coming to an end. Those guys kind of used up all that money, and it's probably waning on people's psyche going forward there. All right, so crude oil continuing to hold on to the $40 mark. Well, it's probably because everybody and their brother is buying something gasoline related, it seems like. Whether it's a RV, you can't even buy a boat in some instances. They are basically backlogged on people going out and buying these different vehicles in order to enjoy the outdoors. And I've talked about this since the beginning, that was going to be a shift, a very big shift in consumers as the retail person, that we weren't going to jump on an airplane, stay in an Airbnb. We were probably going to get a pull behind, or now people, are really looking at getting a boat and things of that nature where they can get outside and travel and social distance at the same time. And that's really what is doing very well. I don't know if that's enough to really sustain a $40 crude oil. Really, the main driver of that is in manufacturing, but we did see a nice uptick in the manufacturing out of the Richmond area. So crude oil holding on to 40s. Gold futures, I got my bonds here. Bonds up about half a point right now. They're not going to go anywhere. We haven't seen the shift in volume happen, but we very well could see that very shortly, as I think the Fed is going to keep rates unchanged, as most analysts are predicting as well. And I think that with that being said, bonds aren't going anywhere anytime soon. Now let's talk about gold. Gold trading just blasting off the top. This overnight high at 1975-ish was created like right off the mark. As the dollar's getting weak, a lot of people are buying into this gold. As a matter of fact, I had one of my Twitter followers DM me and tell me that he's a gold guy and he's a gold dealer. And what he was saying was that he had a customer saying, buy me every gold coin you can find, and literally was bought all the gold bullion this guy had, and said he had a standing order to buy as much gold bullion and coins as he could find. So somebody is really a gold bug, thinking that this is going to drive higher. And with a weaker dollar, another huge round of stimulus, as they are talking about doing the stimulus package, $75,000 or less, gets another $1,200, and for every kid, $500, I think it is, and then adding on that $600 to the unemployment people's checks. That looks like it's going to go through. It's almost, it seems like it's a pretty sure thing. That will weaken the dollar even further. Now remember, we've been talking, it broke below that 96 where I was talking about the 96 level in the dollar. It broke below that. It looks like it could weaken even further. So we're going to be really looking for those 80s pretty soon, I think. All right, VIX. VIX is coming off despite the fact that we were seeing weakness across the board in the equities. We've got the Dow Jones off by about 70 points right now, right at the point of control though, so not really a whole lot to see here in a 60, 70 point move. If it isn't 3 digits, it's nothing in the Dow Jones these days. So Dow Jones off by about 60 points, but right at the point of control. And we can see that we've got 2 separate volume nodes here, or 2 separate points of control, I should say, actually. And one being the time volume right here and the volume node here. We can see that there's a little bit of a trough right there in between. And a lot of times the market wants to build that little small trough when you got 2 different volume nodes. It bounces in between those. We'll build that out and create one big, larger volume node there going forward. So just pull up my chart thing, or my marker here. What I'm talking about is right in between these. We've got the volume node and the or sorry, that's the time node. This is the this is the time node, right? Time node and the volume node there. So usually what we'll see is some building out of volume right in around here to create a nice big bell curve. So I do expect that to kind of happen. I don't think that we are going to go and test those all-time highs. As a matter of fact, I think the NASDAQ has already made that top. We talked about this earlier. We've got basically a tweezer top here is what they call that, when you get 2 dojis or 2 candlesticks going up and testing right around the same level, which we could really say is, you know, right there is the tweezer tops. That's pretty strong resistance. So although it is making a bit of a bounce here, I do think that we are going to see the market start to kind of fall back down. Maybe test that 10,100, 500 points away. Not really that major of a correction, but I think that it would make it look like some head and shoulders too. As you can see, we got a shoulder. It would be a shoulder here, the head here, and another shoulder there. So that is pretty bearish to bring back maybe even down to the 9,700. I don't know that we're going to see that, especially with the new stimulus package. That's really going to keep this economy a little bit more buoyant as people have extra money to spend, and that velocity of money is what I've talked about is huge. I said back when Obama was doing cash for clunkers that he should do something very similar to what we are doing right now, because telling people how to spend their money doesn't create velocity of money. It funnels it all into one certain sector. This allows people to spend the money however they want, and that trickle down throughout the economy really creates velocity and really will help us through this whole recession that we're trying to fight off right now. All right, E-mini S&Ps unchanged, we'll call it. For the most part, we can see overnight did get a little bit long, but coming into today, just as we're seeing more COVID cases in Florida and stuff like that. Although yesterday they released no COVID deaths. Today I think there was a couple hundred, or very well over 100 anyway, at least over 100. That caused a little bit of weakness in the overall markets. I don't think that the markets really took the impact of the economic data today with consumer sentiment, which really isn't a driver, but the Richmond Fed manufacturing being pretty good is probably something that's keeping people in the game, if you will. One thing to note, though, we're talking about earnings here, and pretty much everybody is missing their earnings, which isn't unexpected, right? But one thing we're seeing right now is, I talked about this, it should probably be more about their forward guidance right now. We're not going to be looking at the earnings for what just happened, we know they just did a face plant, right? I mean, face plant with a scorpion where your feet come back over the top of your head and kick yourself in the back of the head. That's kind of what we've seen with these corporate earnings, all right? But we are kind of looking forward to their forward guidance, and we're not getting that. Like, McDonald's didn't even really say anything about forward guidance. So that's caused a little bit of a wet blanket on the overall markets, as you know, that's what we were all looking for. Is we wanted to see what the forward guidance were. We wanted to see how they were going to adapt and things of that nature. And they're really coming up quiet, which sometimes speaks volumes in a sense. So really seeing that fall out. Another thing to note, this name, Eastman Kodak, who some of you guys that are millennials maybe even, or the younger generation, doesn't even know who Eastman Kodak is. When I was growing up in high school, college, Kodak was the cat's meow. I mean, I have a better phrase that I probably can't say, but they were what everybody went to for your cameras. When you bought a camera, it was a disposable camera. You had to go and develop your film at Kodak. So Kodak film was the bomb. And, so with digital age, they just kind of got left in the dust. Well, what's happened here? Why are they trading up in the 9 handle after being $1.50 during the pandemic? Yes, we can look back here at the $13 mark right there, but that was basically back in 2018, 2019, where I can't remember what that spike was all about. But at the end of the day, you can see that they have struggled quite a bit trying to catch up. Well, what happened here? Basically, $700 billion deal with the government is what happened here in Kodak. And that is to bring the manufacturing process back to the United States for drugs. So what they are going to do is they're going to produce the ingredients that goes into a lot of these generic drugs. And they have a contract with the U.S. government to help produce that. So bringing that back, I think it's over, it's like close to 90% of all drugs are created in China. So having some of that here in the United States, especially when we see these pandemics and China says, hey, we're not giving any of the drugs out, we're not allowing them to leave the borders, well, that leaves the rest of the world in peril. So bringing some of this back to the United States, especially the manufacturer, I think is a really good thing. The government's doing a lot to try and help facilitate that, and Kodak knocking it out of the park with a huge pivot from being in the photography sector to now being a drug maker. They actually did own a drug company at one time, but now they are full swing into that. All right, so Mastercard, I wanted to lighten my load on this trade. You know, I have knocked this thing out of the park, like traded it like a clinic, and had lowered my overall cost basis, dollar cost averaged on it ever since the pandemic basically began, and have been pounding away at this trade. First off, selling the 270 puts back in February. You know, it obviously wasn't a great trade back in February, selling the 270 puts as we traded down to 200. So I did take a lot of heat on that. I also sold the 215 puts back in March, right around in this area, sold the 215 puts. Those got put to me. Actually, I don't know if those actually got put to me on that. Yes, they did. And then started selling some calls against it. I sold the 300 calls. I sold the 290 calls. I even sold the 245 calls as I was sold the 300 calls, rolled it to the 245 calls, let those expire, sold out some 290 calls, basically sold some stock at 270, lowered my overall cost basis on this quite a bit though. I'm just looking at it at first blush, it's looking like 10, 11, 12, 13, 14, $15 or so. I've lowered my overall cost basis on this trade by selling calls, selling puts, lowering my overall cost basis. I ended up selling those out today at 309.50 309.59. So just a couple of ticks right before I went on here to do this daily market commentary. I just want to lighten that load. As you can see, we're going into earnings. I don't really want to be in the bank sector. I think that there's probably a lot of people running debt right now as they are unemployed and they're using credit cards, and that could be a systemic problem down the road, especially if we are on lockdown much longer, that people are going to really start overextending themselves. So I decided to take my money and run. You can also see we have a bit of a tweezer tops here right at 316. Happened last week, and so I've decided to just get out of the banking sector or any of that has to do with it. So out of Mastercard, that's the only thing I've done today. So lightening my load. Didn't do any earnings, thankfully. We do have Boeing in the morning, GE in the morning, and StarBucks, which I don't think I'm going to touch any of those, especially after seeing McDonald's just kind of not say anything on their earnings call. I don't know that Starbucks is probably doing that well either. And Boeing? Who wants to trade Boeing right now? No, I do not want to trade Boeing right now. I feel so sorry for those guys and shareholders of that stock, to be quite honest. All right, so that's all I've got for you guys. We're going to be doing a webinar on Thursday. Check that one out. It is on the Poor Man's Covered Call. If you have, if you are margin deficient or capital deficient in your portfolio, this might be a great way to add stocks to a portfolio, a smaller portfolio. It's also a great way to take advantage of a short-term directional assumption. You aren't going to receive a dividend, but there's so many benefits to using this strategy if you want to track a stock that probably far exceeds any of the downstrokes with that. All right, so check it out. Go to protraderstrategies.com. One other thing we do need to talk about here is the site disclaimer. Please take a moment to go over this, as we are an educational company. All right, so that's all I got for you, other than if you can't take that, take it easy.